Good morning, students. We are on chapter number 6 of account part 2, cash flow statement. In this lecture, we are going to solve sum number 16, which is given on page number 286. So, on sum number 16, sum number 16 on page number 286. Here it is. From the following information, calculate cash flow from operating activities. Friends, here data of 2 years are given. Profit and loss account 45,000 and 30,000. So there is an increase in profit by rupees 15,000. Depreciation 90,000 and 70,000. So in the previous year it was 70,000. Today in this year it is 90,000. So there is an increase of 20,000 in depreciation. That means depreciation written off during the current year is rupees 20,000. Goodwill, in the previous year it was 55,000, now it is 40,000. So goodwill written off is rupees 15,000. Then stock, which is a current asset, it was 45,000 and now it is 60,000. So there is an increase in the value of current asset, which is stock. Debtors, earlier it was 90,000 and now it is 50,000. In current year it is 50,000. That means it is decreased by 40,000, which is also a current asset. So current asset debtors decreased. Then creditors, which is current liability, earlier it was 60,000, now it is 40,000. So there is a decrease in creditors. Then bills payable, earlier it was 20,000, now it is 70,000. So there is an increase of 50,000 in bills payable. And then prepaid expenses, which is a current asset, earlier it was 15,000, now it is 10,000. So prepaid expenses written off by rupees 5,000. Now additional information is given. Dividend received, which is a non-financial income, non-operating income. Dividend received, non-operating income 2,000. Interest paid, which is a financial expense, rupees 3,000. And rent received, which is a non-operating income, rupees 10,000. So based on this we will prepare cash flow from operating activity. Here it is. Sum number 16, cash flow from operating activities for the year ending on 31/3/2017. First of all, friends, we have to decide the profit of current year, which can be found by the difference of profit and loss account of 2 years. So closing balance of profit and loss account, that is balance as on 31/3/2017, is 45,000, and from that we will reduce the balance of profit and loss account of 2016, so which is 30,000. So 15,000 is the difference, which is profit for current year. Now first of all, from the profit of current year we will reduce or we will deduct the non-operating incomes. We have seen in additional information two incomes were given, two non-operating incomes were given: dividend received and rent received, 2,000 and 10,000 respectively. So these two incomes, dividend received and rent received, non-operating incomes, will be deducted from the profit of current year. So 2,000 and 10,000, total 12,000 will be deducted from 15,000, which will give you 3,000. Right now we have to add the non-cash transaction, appropriations and provisions. So we have seen, friends, that two non-cash transactions or provisions are given here: depreciation and goodwill. So let us see. Depreciation, earlier it was 70,000, now it is 90,000. So depreciation, increase in depreciation, that is depreciation written off on fixed asset, 20,000, now it is 90,000, earlier it was 70,000. So there is an increase of 20,000. That means depreciation written off on asset is 20,000, which is a non-cash transaction. Goodwill written off, earlier goodwill was 55,000, now it is 40,000. So there is a goodwill written off of rupees 15,000. So these two will be added back to the profit. So 20,000 and 15,000 will give us 35,000. 35,000 will be added to the profit, so it will be 38,000. 3,000 plus 35,000, 38,000. Now friends, we will add the financial expenses if any. So we have seen in additional information that there is a financial expense interest paid rupees 3000. This we have to add back to the profit as it is not operating. So here it is, add financing expense interest paid rupees 3000. So when we add interest also, we get rupees 41,000, which is a cash flow from operating activities before changes in working capital. Okay friends, now we have to focus on current asset, changes in current asset and current liability. So if there is a decrease in current asset or increase in current liability, it will be added to the profit, and if there is increase in current asset and decrease in current liability, it will be deducted from the profit. So let us see first of all which current assets are decreasing and current liabilities are increasing. So we can see from here that current assets debtor, earlier it was rupees 90,000, now it is 50,000. So their debtors are decreasing by rupees 40,000, and prepaid expenses, earlier it was 10,000 and now it is 15,000. So they are also decreasing. Earlier it was 15,000, now it is 10,000. So they are also decreasing by 5,000. So there is a decrease in current asset, debtor and prepaid. And the same way, which current liability is increasing? So that is bills payable. Earlier the bills payable were 20,000, now it is 70,000. So there is an increase of 50,000 in bills payable. So these three items will be added back to the profit: decrease in current asset and increase in current liability. So here it is, decrease in current asset, debtors 40,000, prepaid expense 5,000, and increase in current liability 50,000. Total 95,000. 95,000 will be added to 41,000, will give you 1,36,000. Okay, now we will be deducting increase in current asset and decrease in current liability. So if we see, we can see here from here that stock, there's an increase of rupees 15,000 in stock. Earlier it was 45,000, now it is 60,000. And decrease in current liability, that is creditor, rupees 20,000. Earlier the creditors were 60,000, now it is 40,000. So decrease in creditors by 20,000. So these two items, stock and creditors, will be deducted from the profit. So here it is, increase in current asset, stock 15,000, and decrease in current liability, creditors 20,000. Both will be deducted, and whatever the difference is will be cash. That both will be deducted. And earlier the profit was 1,36,000, now 35,000 is deducted. So 1,01,000 is, this is what cash flow from operating activity. Okay. So friends, this was sum number 16. This way we find the cash flow from operating activity. In next sum we will be solving sum number, in next lecture we will be solving sum number 17. Okay? Thank you.